Hi everyone, I'm Max. I'm the head of communication at the Environmental Carbon Offset Alliance. We offer digital solutions for sustainability projects, and I'm very happy about today's panel. And so we want to take this one interactively, but let's have a quick intro round with everyone here so that you can talk to the people on this panel afterwards in the break on the stands. So maybe, Susanne, let's start with you. Who are you? Who do you work for? And very interesting, interested in your one word, why are you interested in tokenized assets?
Sure, so thanks for having me. Thanks for the CAC organizers and also you for bringing us together. So brief introduction, as a former trader, I found my way into DLT, blockchain and digital assets a few years ago when I looked out for something where I can rather participate and contribute in shaping the future of finance. That basically led me from a rather TradFi role into the fintech and crypto startup scene to Berlin, where I worked for a crypto custodian. Later on, I moved to Frankfurt, so also a little bit of homecoming today, to work with and for a crypto asset management company where we build products through traditional investment vehicles investing into crypto. In my today's role, I'm now focusing on using DLT and blockchain for new use cases for a global wealth management company. In my capacity today, I will share my very personal views, also based on the experience I gained in the last few years. Also, a little disclaimer, this is my personal view on that, not associated with my employer. And the last one word, or what I associate with tokenization today, ecosystem growth.
Ecosystem growth, okay. We have a jam-packed agenda. You know the storyline and the questions we want to talk about, so maybe we'll do the introduction a bit shorter so that we have more time for questions. No worries. Yeah, Jürgen, we go.
Okay, yeah, no worries. I keep it short. Hi there, Jürgen. Great to be back here at this conference. I do anything around partnerships and growth at Taurus. For those guys who don't know Taurus, it's an infrastructure provider for custody and tokenization. Really think about it as the tech, it's the backbone behind custody solutions. So my background, initially I thought it's actually quite exciting, but now more and more people coming in. So it's traditional finance who then moved into the tech space and kind of got hooked into digital assets. Pleasure to be here. My one word, I forgot, automation.
Right, hi everyone, Marat. I work for Moody's Ratings. I don't think I need to introduce the company, so everybody should know Moody's Ratings here, but I work in the digital asset team, so we support rating analysts when they need to rate digital bonds, tokenized funds, and other digital assets. I guess my one word will be accessibility for today.
Hello everyone, my name is Luis Nacarino. I work at Banco Santander in Madrid. I'm an executive director in the digital assets unit in the corporate and investment bank of Santander. Santander is the largest bank by market cap in Europe as of today. And Santander has been a pioneer into the digital assets space. We've been working in digital assets for many years. We've been known by being joint lead manager in 3 digital assets issuances, but we cover the full space from digital assets, digital securities, digital cash, and crypto. Looking forward to this very exciting discussion today. And my one word for tokenized securities would be programmability. Thanks.
Thanks, Luis. James Harris, Chief Commercial Officer at Zodia Custody. Zodia Custody is a regulated institutional digital asset custodian and technology provider. We're based pretty much globally, bar the US. More on that maybe some other time. I look after the technology part of the business, so providing technology to the banks. And my word for the day is efficiency.
So efficiency, automation, programmability, accessibility, ecosystem growth, all positive words. I'm interested in, since we have so many institutions here on this panel, what would you rate or is your assessment on the current adoption of tokenized assets by institutions.
Okay, I will jump in. So I think we are still in the early stages, even though there's a lot of interest. As I said in my introduction, digital securities have been around for many years, but it takes a lot of time because first of all, there's a learning curve. There's a lot of education inside the companies because people get confused. What are digital securities? What's a tokenized security? Because they mix things up. They think, okay, is this a Bitcoin? What do you want to do? Because in banks, especially banks who are super regulated, we need to explain and educate people. This is from the internal point of view, and for an external point of view, I think the industry is still cautious because there are many initiatives around, so there are many silos. So where should we put our bets in? It's very difficult. So some institutions are early adopters. I would say Santander is an early adopter, a pioneer, even though we are still learning. We've done many proofs of concepts for learning purposes, but now I think it's time to move from learning, from exploring to real use cases. And I think we need to articulate use cases with value so that we could move forward in the adoption of digital securities and digital assets in general.
That's a good point, and I want to add a little bit also in light of my ecosystem growth word at the beginning. It's exactly that, right? I think when we all started looking into the tech, what it can do for us, and with the potential benefits it can bring, we all named it. Most of them are super interesting from a bank or institutional perspective when we talk about, especially around efficiency gains, how we do transactions, how we maybe reconcile transactions, doing that on a unified ledger most probably could really help us. Again, new technology, learning, but also I think we all signed up for kind of an exponential growth path, right? It goes step by step. It's now, I don't know, the 5th, the 6th years in a row that we talk about what's next for tokenization, I know. What I feel where we are, as you did, say, yes, we gained experience. What is still a little bit lacking and where I want to challenge all of us, we have to connect the dots, right? That digital ecosystem, that growth ecosystem is emerging. When we apply our traditional view on that, on existing client bases, existing client segments we are serving today, it may be not the ecosystem which is really out there. So, yeah.
I think we're also shifting from a situation where people are fearful of launching products to a situation where they think, okay, we need to launch products. So that's really, really good. So at Zodia, and I think at Taurus as well, we get to see banks before they actually start shipping stuff. And so the news is good. Underneath the surface, like a colleague of mine was just talking about horses preparing for a race, and no one really kind of wants to go first with some of these things because the first one at the beginning doesn't often win the race, and sometimes they fall over and break their leg and stuff like that. So I think we're seeing lots of banks doing POCs, testing their tokenization rails, preparing their infrastructure. It's not out yet, but that fear environment is going away, and soon I think we'll be seeing some promising news.
Maybe just to add here, a couple of numbers, and we look at the markets. I mean, it's still, tokenized security market is still small compared to the world, right? So you think about securities, maybe, I don't know, 8 billion compared to traditional financial markets, 100 trillion, 600 trillions of assets, right? So it's very small. The growth is there, but it's a drop in the ocean compared to everything else. The other thing, what, especially at the beginning of the year, what excited me, and when we look at the clients we work with and prospects, is markets that really matter and can drive something in, whatever shape and form. But let's talk about the US, for instance, opening up, right? And being, in a certain way, more positive about it again, even though in a very interesting way about it. But that drives it as well, right? Because then you have really large players that come in and can change things as well, right? And most of the global banks are based here still, and that's kind of like what what I find exciting for this year as well of the adoption. So hopes are there, that's for sure.
And I think it's a crypto asset conference, so we all know the advantages of it, and we could talk for hours about the advantages. Maybe let me rephrase this question when we look at the market dynamic. Why isn't, so this is my fourth CAC, I think, and I think product-wise it's exciting, we know the advantages of it, but why don't we have this large-scale institutional adoption yet? Is the time frame that we were looking at 5 years earlier, was it wrong? Or, I mean, we have the institutions right here, it's UBS, Moody's, Santander, for example, these are all very well-known and respectable institutions, so why don't we see this large, why isn't every money market fund, for example, trading with tokenized assets?
I can take that. I think there are 4 key reasons. I think the first one is that there are still large infrastructure and knowledge gaps when it comes to digital assets and tokenized assets being transacted on digital asset rails. So I think, you know, the custody layer, I would hope, is fairly well solved, but I think that you don't have a settlement layer yet that works really well. Like the clearinghouses functions are coming up at the moment. There are a few being built. Clear Token in the UK is one of them. That needs to be built out because institutions expect settlement to not fail when trading with counterparties, so I think that's important. I think also the market is very fragmented. And so if you look at all the tokenization providers, the platforms, all the players that are involved, there are thousands and thousands of solutions. And there are thousands and thousands of blockchain rails. And I think that's just too many. It's like, you know, being in a restaurant and having too many options in the menu. You just can't make a choice. In the end, you go for the Caesar salad, right? Or you end up walking out because you're frustrated. So I think that's what you see in a fragmented world. And institutions like yours, for instance, you need to pick someone, right? You need someone to go with, and then you're overwhelmed with these choices, and it's costly to have to integrate. And we know firsthand from being a custody provider, every time it's a new protocol, new integration fees, new block explorers, everything that we have to solve. So I think that's one. I think the regulatory picture is massively improving now. That's one that we maybe 2 years ago would have said the regulatory picture is really crap. You know, we need to work on that. So that's moving on nicely. But then I think there's this still, people have led with technology as a solution rather than actually assessing what the market demand is. What is the demand? What are the things that people are asking for? Is it, I want my capital to be more efficient. I want to be able to move things around more quickly. I need a finer control as to who's got my products. And then launch a product into that demand.
Yeah, no, thanks, James. I 100% agree with you. I think we need to look to what investors demand, and the investors demand something that is seamless to them. I mean, if they use their global custodians, they want to keep on using their global custodians for digital security safekeeping. I mean, digital custody, from a technical point of view, is solved. There's no problem. Technology, we 100% trust. It's working. You do it, other players do it. But from a business perspective, we need global custodians so that securities can be moved around seamlessly. You can settle wherever you need it, so that it's convenient for investors, for the buy side. And I'm speaking on behalf of the sell side. That's what we see. And there's also a second thing. So you can have the digital securities. You have the D leg, the delivery leg, but you also need the cash leg in order to do a DVP. So digital cash is still super fragmented. There are many discussions in Europe. There's a hot topic also in the US after the inauguration of President Trump. There's many things cooking, but we still different options: tokenized deposits, stable coins, reserve-backed digital currencies such as Finality. There are different things, but we still need to find what the best solution is.
Susanne, before we have you, I want to add your Marat on that, because you had the word accessibility.
I guess one observation I can share for Moody.
I think the mic isn't working. Maybe try the green one there.
So just to share one observation from our side, right? I think there are some first movers in this space, and they really want to get the advantage of for marketing purposes, to demonstrate to the world that they can do it. It's expensive. It takes a lot of time, a lot of legal costs to issue some bonds. And for those, we see that actually there are subsequent issuances. So it's not that they tested and they gave up. No, they rather want to continue. For others, that are not in this space, it's still not clear how it's going to develop, right? So they employ rather like wait and see strategy. So they want to see until it becomes really easy to issue and move on with that, then to go through all the hurdles that other banks are like first movers have. So that's kind of observation that we've noticed here.
And only very briefly to add, right, exactly these challenges you described, I think where all the benefits are, there are new challenges arising, right? And by solving these challenges, I feel we sometimes have to go back to the basics and asking ourselves, okay, what is the problem our client has and how can we help him to solve it? And by helping him to solve it or finding an answer, I think it's more necessary than ever to connect the dots and really go down to the basics of how we transact and transfer value in the end.
And going back to the basics, when I talk to companies and they are interested in, hey, what is the underlying tech actually about? There are so many new questions, new complexity that could be introduced in something that is clearly set out from the get-go. So for example, if we talk about the tech, and I'm interested in public versus private infrastructure here, isn't that adding like a new complexity to something that should be clear already, or we are already regulated and have already paths that we used to and are used to? And is this market something that will be a winner-takes-all? If we look at stablecoins, for example, would it be like a winner-takes-all solution introduced from like a regulator or one big player?
Well, I think I can start here. Is that many people say it's a kind of a competition between private blockchains and public blockchains. I think competition is that when both parties want to compete. In this case, I don't think that public blockchains really want to compete, right? They're built for different use cases in most of the cases. So I know there is competition between like private blockchains because there are many different models. Different banks compete with each other and they don't really want to use the model or the platform or their competitor bank. So we've seen some banks making some announcements, even changing the model, opening to wider set of participants and node operators. On the public blockchain space, I think there is some competition. There is a lot of hype about Solana, for example, issuing a lot of meme coins on Solana and so on. But also it depends really on the use case. So what kind of assets is being issued there? So from Moody's perspective, we're actually agnostic to the blockchain type. So we can rate bonds and assets on public blockchains, private blockchains. It's just the risk profile will be different, depending on the setup. So if we talk about private blockchains, we would rather look into like the operator of the blockchain, how sound the operator is, what kind of business continuity plans they have, and so on and so forth. If we look into the public blockchain, so issuances on the public blockchains, we rather look into smart contract itself. Has the code been audited? What are like permissioned features in place? Can you freeze the token? Is there a KYC requirement, and so on and so forth? And plus, when we look into the public blockchain, we tend still to ask for kind of the backup solution. So what happens if the blockchain is stuck, if your ledger is not updated, and so on and so forth? As long as the issuance is compliant, we are fine to assign a AAA rating to bond issued on the public blockchain. And I think we've done so already for one of the bonds issued here in Germany.
Happy to add to that. I think riff on your theme, Marat. Zodia is very uncompromising on this view. Your question is public versus private infrastructure or blockchains. For us, on the one side, you've got open markets, open accessibility, open protocols. And then on the other side, you have a couple of guys trading with each other on a spreadsheet. We already have that. It's TradFi. So let's leave that alone, right? And build on an open network and try and actually bring out clients, new use cases, new markets, new utility. I think that's really exciting. So the real question is actually, okay, assuming the private blockchain story falls away, we think it does. The real question is what's happening on the public side. I mentioned before 1,000 layer ones and layer twos. It's probably another 1,000, but it's hundreds. Right? And that's just an unmanageable amount, and it confuses the market. I think that what you're going to see is a coalescing of assets onto 10 to 15 layer ones and then a commensurate amount of layer twos. I think, to me, that's the right kind of scale. And then we'll be talking a lot more about interoperability and making sure that the connections between the chains make sense. Because you can't tell me that the 101th version of the L1 has got a unique innovator that the other 100 don't have. It's just not true. So let's focus on, and I think TradFi is going to be instrumental when they come in of picking winners, and you'll start seeing scaled players in the space, which will be of benefit to everybody.
No, 100% agree with you again. I believe in public networks, but private networks have their own use cases as well. So I think they should live together. This is, I would put an analogy. You can think of internet and you can think on intranets. They have different use cases and they live together seamlessly. I think.
Do you need a blockchain for internet?
You should.
No, sorry.
Well, okay, then.
That's the question. Like, you know.
Yeah, what was the question? Maybe the audience also want to know.
Sorry, the question was for a private instance. Do you really need a blockchain? Can't you just run a spreadsheet?
Yeah, sometimes you don't need it, but it's cooler if you have. It's cooler. No, but it depends on the use case. It depends on the use case. But we have found out some use cases when we need to explain, when we want to develop a product or a project, we need to explain this to our lawyers, to our compliance people, and sometimes they ask, this is kind of an Excel spreadsheet shared between different players, and we say, yeah, more or less, it has something to do with that philosophy, and sometimes I agree with you, you don't really need it, but, well, you rely on the smart contracts, programmability, and these kind of things, a shared golden source, but you don't really need it in every single use case, of course.
Yeah, just to add to that, so public blockchains, great. We work with both, but what we have seen, and actually what's quite interesting, is private tokens on public blockchains. So think about zero knowledge proof. It's kind of how can you verify an information on chain without actually giving away the information, right? So think about the compliance, think about the risk aspects and everything around it. So we did a bit of research. Look, we're a tech company, so that's what we do, is looking into Aztec protocols and others, and how can you combine the two. Now, it adds more complexity, but I think over the time, it's an interesting way to, I don't think there's a winner takes it all. I think it's going to be a hybrid. Like in many things, it's not black and white, and it also depends on the use case, right? So if I think of big banks, what do they need versus what do we need in the DeFi space, right? Do you need so much privacy, less regulation? Probably not. So that's way for the audience as well. Have a look into private tokens, which I think is kind of an interesting development in that space.
And adding or laying this question about the complexity one layer deeper, when I talk to, for example, German board members of like a machinery producer in Lower Saxony, and I just mention the word blockchain, it's immediately this kind of reaction, oh my God, this I cannot understand, do I need engineers, does the CFO get the wallet phrase, and this introduces so much that I don't want to think about it. So when we look more on the institutional side, what is the marketing effect of blockchain right now? And is that changing? Is that something that you introduce when you think about product approach to customers? Do you integrate this? Is this something that you really play, or is it like a digital layer?
I can take that. So blockchain is a buzzword, smart contracts a buzzword. So some people lay back and say, oh, this is not for me, I don't want this. But on the other hand, there are some other, let's say, clients that when they see an opportunity to learn or to show up together with big banks in a blockchain project, that shows that they are interested in learning, in innovation. So I think it has a lot of, it's a word that has a lot of marketing attached. Well, I'm saying this in these times where AI is the real buzzword, and when I make it to to blockchain and digital assets conferences, and I see one of the topics is AI. This comes with much more marketing, but still, blockchain has a lot of marketing. You can do it because you believe in innovation, and sometimes it's good for your marketing purposes as well.
I think it's actually two extremes, right? There are the ones who are embracing the technology, who are actively looking out to use the digital rails, who already manage their assets fully digitally and really want to leverage all the automation and efficiency gains they can get out of it. And then there's the other extreme you explained, right? Where blockchain is very often a term mixed up with other things, where people have many misconceptions and the real hesitation of getting into it, and as long as they can avoid it, they avoid it. Truth is, to me, people have to consider it. There is so much opportunity out there, you just have to find, and just is not as easy as said, find your value proposition and understand where your current role is and reconsider whether this is still a role you're going to play in the future or this would change. And if you are impacted, then you have to have a look into it.
I'll add as well. Thanks, Susanne. I think it's a great answer. Until the prep call, I actually hadn't used the word blockchain in quite some time. And I think it's because we need to abstract away the technology question from the utility question. So when we go and speak to our prospects and clients, we will lead with, like, what are the outcomes you're trying to get? Like, are you trying to make your capital more efficient? Do you need a programmability of assets? Do you want to move your assets around intraday for collateral purposes? Those kind of things. And then it's a question of, like, yes, we want to do that. Well, okay, and you want to do that over an open network, then actually we can help you. So I think, you know, we really need to see the value propositions lead and the tech to be supportive. Now, where the tech is supportive from a narrative perspective is the assets themselves are highly transparent, can be audited, and I think that's where you can then say, well, that's because of the blockchain. But really, we have to take away the tech complexity and make sure that the clients and the platforms themselves are seeing that 10x improvement of, you know, usability.
And that 10x improvement is where? Because I wanted to ask the value proposition, then stripping away all of the complexity that might be introduced to blockchain technology. Where you do see, like, for institutions, the key value proposition, if you only could pitch one, what would that be?
If it's one, it's intraday settlement and capital reusability. If you think about it, like, you've got no one in TradFi actually has any money, because basically you have to do the trade, you have to wait for the settlement to happen, and then you match up the things, right? Now, what if you had a whole host of asset classes that were available instantly? And there's a chicken and egg element about that, might be a further question. But if you had instantly settleable assets, or a whole family of them, equities, bonds, the whole gamut, you could do these things instantly, which means you can, in theory, turn your asset and capital around much more quickly. So that could put potentially, you know, 2, 3, 4 percentage points on global GDP just by being more capital efficient. That's my one for you.
Yeah, exactly. These different perspective of efficiency gains, right? One from a capital efficiency gain, but on the other side also through the automation, through the system-to-system communication through smart contracts. This is the other perspective of efficiency and potential cost savings.
Yeah, liquidity improvement, potential cost savings, capital gains, moving assets around 24/7, being able to settle in T+0, being able to get liquidity out of an asset that otherwise would settle in T+2. Now you can do it in T+0. We've done repos that have settled intraday. We have done repos the near leg and the long leg with 4 hours of difference. This is impossible with the traditional finance legacy systems. This is impossible. So I think there's a world of opportunities here, but as both of you said, we need to articulate properly what the use cases are, what the benefits are, and put the numbers in a spreadsheet, and then go talk the rest of the people in our institutions to try to convince them that this is not just a hype. This is something for real. We can make money and we can save money with this.
And one addition to that, I think it mustn't stop there, right? Once you've figured out what it solves, there are many secondary effects, which could be another opportunity case itself. And this is the very interesting thing I personally are interested in, to really explore that opportunity space resulting out of that.
Do you want to? Then before I go into the last topic that we have for our panel here, I wanted to open it up to the audience because I know we have a microphone here. If there are any questions from the audience, our panelists were very eager in our pre-discussion to take questions from the audience. So opening up, is there any questions? I see one here. I can take the microphone myself. Working, yeah.
Yeah, I mean, just a remark. First of all, I mean, you're absolutely right. We need less tech people in the room, more bankers in the room. But on this last question about what's really the big advantage to convince the industry, isn't the fact that this all happens so fast and is irreversible also a big fear for the industry, right? Somebody hacks a system, you send $1.5 billion away, irrecoverable, right? Isn't the fact that you just stated here, is it's so fast and it's happening overnight and 24/7, isn't that actually a big fear factor for, at least for traditional bankers? So I'm wondering, at least this part is a two-sided sword here, really.
Well, I don't think it's a big fear because there are enough controls on the front office, on the trading side. There are for-eyes controls. There are many things, so people pay attention to what they do. And even though the blockchain is immutable, then you can update your positions. And there are different flavors to this because there are different flavors. I don't want to use the word token, but there are different flavors to digital records. And then in some use cases, you can update a position. So the token or the digital record could be a digital representation of a position that gets updated. It's not that it's immutable. And so a position can have a value today, and if you are wrong and if you want to roll back, you can just update it. So the trace is there. So there was a transaction before, and then it got updated to something else. So there's no, I don't think there's such a problem. I don't know if you want to.
Maybe. Yeah, so just quickly chip in. I think there's two sides to it, right? One is crypto and one is securities like RWA tokenization, right? So what you're saying, correct? Probably from a tokenization perspective, it's less of an issue because you have traceability. You can do it. You can burn it and mint it again, and so custody is different as well. On the crypto side, yes. However, I would also say that, and that's again an evolution, right? So sometimes it's not the technology that fails, but it's again the people that fail, right? So think about social engineering. How do you actually get initially to it? How do you convince somebody get into the systems by all those good things that, if you think about large institutions, spend a lot of time educating people, training the people, don't press that button, don't press that link, and so on. That, I think, needs to come up to speed as well to some of those institutions that have been at the forefront, but maybe, haven't had the experience from the past that legacy institutions have. Hence, all about compliance, risks, trainings, and so on. So again, for some things you referenced, I would more say, okay, how can we ensure that companies get up to speed, not so much on the technology, but on all the approval mechanisms off-chain that form part of it, which teams can approve, 4i checks, and so on and so forth.
I guess I can give one example here is that when, for example, we assess tokenized funds, these are purely on-chain. They are registered on-chain, everything is happening on-chain. Investors subscribe using stable coins, get the fund tokens, and can do whatever they want with the fund token. So when we assess these funds, we make sure actually that there are controls. So first of all, only whitelisted wallets can hold the token. Then if there is a secondary trading, it's also KYC players that trade. And the third thing, if the token is stolen, do hackers have the way how to monetize the token? Can they sell it somewhere, right? And the funds that we have assessed, it was not the case. So we were relatively safe to assign credit assessment to such solutions, but definitely we look into that when we do our assessments.
Thanks for the icebreaker question. Do we have I see a second one up there.
Hello. Well, Rob from Stellar here. I'm happy that I think Luis brought the one of the elephants in the room, which is the cash lag for the DVP on tokenized securities. Just want to see if any of you, and particularly from the bank perspective, you have any thoughts on which will get first to the regulated financial institutions, because just on my perspective, CBDC is kind of this always tomorrow use case that doesn't come to fruition. Tokenized deposits, the regulated liability is a beautiful white paper, but we don't see that ramping up in stable coins now. Tether leaving EU, Circle registered in Europe, but still circulating supply being low in Euro at least. So where do you guys see this going? What would be the first tokenized cash that banks would be comfortable interoperating and trading against securities?
I will take this one. So I think there's one solution out there that it's live. For real, it's called Finality. There are 20 shareholders to Finality. Santander is one of them. There are 3 live banks in the UK using Finality. Finalities are reserves-backed digital currency. It's based on an omnibus account open at the Bank of England. Currently, there are 3 banks, UBS, Lloyds, and Santander. We are making payments for real. And the Finality payment system, as I said, it's live in the UK, and it will be approved by the Federal Reserve in the US, hopefully later this year. So we will have this settlement leg, both live on pounds and in US dollars this year. And there's an open discussion in the European Union about digital euro and so on and so forth. We think there's a good solution out there. It's proof. There's a rule book. It has been legally reviewed. So I think this could be a solution that could be adopted here in Europe, but this is a bigger discussion with some political nuances. So I think there's already a solution.
And I think both your question and your answer implied that there is still fractionalization, right? There are different answers to the problem of having, or a requirement of having cash on chain to enable that atomic settlement. And again, with fractionalization, I think it still has to emerge. The one which gonna wins, I don't know. I hope, I guess, clients will tell us. So
well, there are also global initiatives such as Project Agora. They are discussing this right now, and these are tough discussions. There's no single ballot. There are different interests in the different stakeholders. It's complex, different jurisdictions. There's also the element of the different views on different jurisdictions, different interests. So this leads to fractionalization, and we need something that is universal, interoperable. We need to preserve the singleness of money. So there are many questions out there, and it's not easy. We'll get it sometime.
Do we have one more question from the audience? The time with the low phone? Yeah. That's why I tried coming in front, so I see you on the right side. Go ahead.
Thank you. My question is going to the representatives of the 2 banks, UBS and Santander. Briefly, because we ran out of time, could you elaborate on the latest 2 initiatives you are working on tokenization right now? What are you working on right now?
I hope I got your question right. So your question was, what is the latest activities we are on, right? So generally speaking, we are looking into tokenization of securities. Could start with funds, goes into any other financial asset.
And I can say we are looking into collateral mobility. So moving collateral around could be super interesting. Moving it around 24/7 could unlock liquidity. I think these are the kind of things we're looking into. And the last thing that we released was not a formal press release, but we are live on JP Morgan Onyx. It's Kinexis right now, so we are trading repos on dollars and euros, and we are looking into more use cases.
As we enter the final minutes of our panel, Jürgen and Marat, maybe we'll have your opinion on that. How do you see a changing regulation on the global landscape impacting tokenized assets? Because we have next chapter in our title of the panel. So MiCA into effect in the European Union, a new administration in the US. Do you see any ripple effects on tokenized assets?
Excellent, thank you. Well, actually, we see any regulation as positive, right? So it's better to have regulation than no regulation at all. In terms of stablecoin and CBDC regulation, we observe like these poles. One pole is now US, where you completely ban CBDCs and you embrace stablecoins. The other pole is probably China or India, where they completely ban stablecoins and they embrace their own CBDC, right? And we are somewhere in between. So in Europe, we've seen the positive effects from MiCA because we see a lot of entities that try to register and get the license, right? We're also in talks with some of them because we're interested in their business model. So I think it has still to develop. I think it's positive in terms of having non-USD denominated stablecoin, right? Because there are some use cases for being independent from the issuers of USD-backed stablecoin. So in general, yes, we are always embracing the regulation.
Then let me rephrase this question for a lawmaker currently watching this panel. If they were to grant you one wish for what they could do for your industry, is there I know there are many of wishes probably, but if you have your biggest wish for a lawmaker, what would that be? And I can hand over the mic so we have enough wishes.
So you're a genie? One wish, really?
Yeah.
3 wishes? Sure.
No, one wish.
Okay. I think a seamless passporting, that's one wish. I'm going to give you 3. Sorry. Seamless passporting, I think that's not addressed properly. RWAs haven't been addressed properly. And then finally, why not give euro-based stablecoin issuers the ability to pass through yield? That's really what needs to be done. And then we open up a lot.
Okay, so you can have 3 then. Everybody can have 3 if you have 3.
Can I ask something?
Sure.
So for me, it would be 5 words: same risk, same regulatory outcome. That's what I ask for.
Okay.
It's probably the harmonization, right, between what we have in the traditional finance world and the digital one, and it's getting closer, right? MiCA was one step towards it to capture also things that haven't been regulated, keep the rest in there, but it's still there's still overlap or there's still kind of unclarity of certain aspects. So I think there's still a lot of ways to improve it. Regulators need to be, again, keeping up and being involved with the industry, because that's the only way they can learn and they can kind of set regulations that are right for the industry to scale. And then I would look into smart contracts as well, and kind of how can we, because at the end, the technology will be in the back. Nobody will care about it anymore. I don't think we'll talk about blockchain anymore. It's about, okay, so what's the instrument you want to issue and how can that be done, right? And also what is kind of the blueprint for an issuance there, right? So there's associations out there already that do and that drive that one, and I think that needs to happen even more, because then large institutions can come and can say, well, rather than building something on my own, take what's there, maybe adopt it to slightly nuances depending on the country, but go with it without having to think too much about it.
Well, from my perspective, I think we are always kind of having troubles to follow regulations in different jurisdictions. So my wish would be to have uniform regulation across the globe, or at least, in part of the regions of this world, because it's always troublesome when you have investors in one country, you have issuer in another country, how, which law regulates the issuance, the issuer, and so on and so forth.
And I know the time is already flashing, but you can take your time. I think it's a lunch break afterwards, yeah.
Okay, yeah, simple. I mean, blockchain is global, right? Investors are local, so we have to find the right balance between the respective regulations. It's not easy, but yeah, we are working on it, right? We are all contributing to it.
So for any lawmakers watching also online, we have people you could talk to for future legislative. So thank you very much for this panel. Thank you in the audience for your questions. And I'm sure you can talk to our panelists and also myself if you're interested in further developing topics we had on the panel during the break or afterwards on the conference. So have a nice rest of your CAC and hopefully see you next year.